Hey everyone, welcome back. We dive deep into today's crucial topic. If you find this information valuable, don't forget to hit that subscribe button. Let's reach 1,000 subscribers together, and we'll continue bringing you the best tips on growing your small business. Running a small business in the USA is an exciting, but often challenging journey. In fact, according to the U.S. Small Business Administration, approximately 20% of new businesses fail within the first year. 45% fail within the first 5 years, and 65% within the first 10 years. And while there are many reasons for business failures, like poor product market fit, lack of customer demand, or ineffective marketing, the biggest reason is often poor financial management. Today, I want to take you through everything you need to know about entrepreneurship and small business finance. The nuts and bolts of managing money, making smart decisions, and setting yourself up for long-term success. It's crucial that as a small business owner, you understand that financial management isn't just about managing profit and loss. It's about ensuring your business has the resources to survive, thrive, and grow in a competitive market. Understanding cash flow. Let's start with the lifeblood of any business, cash flow. Cash flow is the movement of money in and out of your business, and it's what keeps your operations going. Without sufficient cash flow, even the most profitable business can run into trouble. Many small business owners focus too much on their profits and forget about cash flow management. The reality is, you can be profitable on paper, but if cash isn't flowing when you need it, you won't be able to pay employees, suppliers, or invest in new opportunities. Tracking cash flow is crucial. It's important to know exactly how much cash is coming in, how much is going out, and when those inflows and outflows are happening. A simple mistake like delaying invoices or failing to forecast your expenses properly can lead to a severe cash crunch. Tools like QuickBooks, FreshBooks, or even basic spreadsheets can help you track cash flow, but you need to check it regularly to make informed decisions. Setting up a budget for success. Next, let's talk about budgeting. A budget is your roadmap for managing and allocating funds within your business. Without a budget, you're essentially driving blindfolded. Having a well-thought-out budget helps you plan for expenses, project revenue, and understand where you're overspending. One key thing to remember is that a budget isn't just a tool for tracking where your money goes. It's a tool for forecasting where you want it to go. A good budget lets you plan for both the expected and unexpected. For example, you might have fixed costs like rent, salaries, and utilities, but there are always variables like marketing campaigns, seasonal dips in sales, or unexpected repairs. As your business grows, revisiting and adjusting your budget regularly will ensure that you stay on track. It also provides an opportunity to invest in new areas that will help you grow, whether it's expanding your product line, hiring new staff, or scaling your marketing efforts. Understanding business credit. One of the most overlooked aspects of small business finance is building business credit. Many new entrepreneurs only focus on their personal credit scores, but in the long run, your business needs its own credit history. Having strong business credit can help you secure loans, get better rates from suppliers, and access financing when you need it most. But how do you build good business credit? Start by setting up a business credit card and using it regularly, but responsibly. Make sure you're paying bills on time and get a copy of your business credit report annually to ensure that there are no errors. Over time, as your business credit score improves, you'll be able to borrow at lower interest rates and access more favorable terms. Funding your business. Let's talk about funding. Every business needs money to grow, but where do you get it from? One of the first options that come to mind for most entrepreneurs is business loans. There are many ways to secure loans, through traditional banks, the U.S. Small Business Administration, SBA, or even online lenders. But it's important to understand what kind of loan is best suited for your business needs. If you're looking for a lower interest rate, SBA loans are often the best route, but they do require a solid business plan, collateral, and good credit. On the other hand, online lenders and alternative financing options offer faster access to cash, but may come with higher interest rates. Crowdfunding platforms like Kickstarter and Indiegogo can also be an option if you have a unique product or idea that can generate interest from the public. However, before borrowing money, make sure you're clear on how you'll use the funds and ensure that the business can generate enough profit to cover repayments. Mismanagement of funds and borrowing more than you can handle is a common pitfall for many entrepreneurs. Tax planning and saving. Now, let's talk about tax planning. Taxes can be overwhelming for small business owners, especially with all the rules and regulations involved. However, tax planning doesn't have to be complicated. The first step is to understand your business structure. Whether you're a sole proprietor, partnership, LLC, or corporation, because it affects how you file taxes. You also want to be sure you're taking advantage of all deductions available to you. For example, if you have a home office, you might be able to deduct a portion of your rent or mortgage. Business-related travel, equipment, and even some meals can be written off, so make sure to keep accurate records and receipts. Hiring a tax professional or accountant can save you a lot of time and money in the long run, helping you avoid penalties and take advantage of tax breaks you might not know about. The goal here is to manage your taxes so you're not overpaying, but also not underpaying and facing penalties later. Building an emergency fund for your business. One of the most important things you can do for your business is to create an emergency fund. Every small business goes through ups and downs, and you want to be prepared for slow seasons or unexpected expenses. Building a buffer of savings will give you the financial cushion to continue operations even when cash flow dips. A good rule of thumb is to set aside enough funds to cover at least 3 to 6 months of operating expenses. This emergency fund can be a literal lifesaver when your business faces an unexpected financial hurdle, like equipment failure or a sudden economic downturn. Scaling your business. Finally, let's talk about scaling your business. Scaling a small business isn't just about growing revenue, it's about scaling your financial capacity to handle that growth. As you expand, you'll face new challenges, like hiring employees, managing larger volumes of orders, and increasing marketing efforts. One of the key strategies for scaling is to ensure that your operations are efficient and that you're not overspending in areas that won't directly contribute to revenue growth. For example, investing in automation tools or streamlining your supply chain can help your business grow without increasing overhead costs exponentially. Another important aspect of scaling is raising capital. If your business needs an influx of cash to handle increased demand, you might need to seek investors or apply for larger loans. But remember, just because you have access to more capital doesn't mean you should overspend. Manage your finances prudently and always have a plan for how that money will generate returns for the business. Conclusion. So, what's the takeaway from today's talk? As an entrepreneur, mastering the basics of small business finance is essential for your long-term success. From cash flow management and budgeting to building credit, tax planning, and scaling your operations, every decision you make can significantly impact your business's ability to survive and thrive. By developing a strong understanding of financial management, you'll not only avoid common pitfalls, but also position your business for sustainable growth. The path to success isn't just about hard work and passion. It's about making smart financial decisions every step of the way. And don't forget, if you found this information helpful, hit that subscribe button, share this video with your fellow entrepreneurs, and let's get to 1,000 subscribers so we can continue providing you with valuable content. Thanks for watching, and I'll see you in the next video.